Hey guys, in this video we're going to look at the relationship between trade liberalization and strong sustainable growth. We're going to look at this in a flowchart. So before we go into the flowchart, we're going to look at the definitions again. So trade liberalization, as a brief definition, is the gradual reduction or removal of trade barriers. So this includes subsidies, import quotas, or tariffs, which restrict the movement of free trade. Strong sustainable growth relates to two concepts. Firstly, strong growth, which means that we are maximizing economic growth without the onset of high inflation. And high inflation is any type of inflation above the target range. And secondly, we have sustainable growth, which relates to this idea of environmental sustainability, so that we don't produce now and leave no resources for the future. We are achieving intertemporal efficiency. And if you want to remind yourself what intertemporal efficiency is, I encourage you to look at the lecture clearly devoted to intertemporal efficiency, or the different types of efficiency that aggregate supply policies aim to promote. Yeah, so let's look at this flowchart here. So we have trade liberalization. The government has adopted this macroeconomic goal of trade liberalization. So what this means is that leads to greater competition. And as we know, with greater competition, this means forces producers or domestic producers to cut production costs in order to survive. So if they don't cut costs, then we can just import from overseas, and that would satisfy needs and wants, and these producers domestically won't have any income through selling their goods and services, because they remain uncompetitive compared to other international foreign producers. So what this means is that inefficient firms don't survive. This may seem very harsh, but for the greater good of the economy and for the greater good of our comparative advantage in our resource allocation, this is essential that it happens, that we don't have inefficient firms producing goods and services in the economy, because therefore we are not allocating resources efficiently. So what this means is we are achieving comparative cost advantage. So with comparative cost advantage, this makes our exports cheaper, and it also means therefore more exportable goods or services in some cases. And so what this means is that in the long term, it creates sustained growth. So what this suggests is that we are not adding to price, we are not creating inflation situations or inflation economies where we are adding to the price of goods and services. As we know in our lecture on trade liberalization and inflation, that imports are included in the calculation of CPI, and if we add tariffs, or if we add import quotas to international goods, this would only increase the price, or the world price, of international goods, and therefore add to inflation pressures. But with the reduction of this, it means a long-term sustainable growth rate where we are producing at our most efficient point, which achieves environmental sustainability, because we require fewer resources in order to sustain this economic growth, and it also achieves this idea of low inflation through strong growth. So that's how trade liberalization can help sustain strong and sustainable economic growth. Secondly, we can look at this in terms of business productivity. forces firms to cut costs, we can look at this in terms of imports. So with trade liberalisation, we'll just rub this out. We're going to go on a different path, a different flow chart. Okay. So instead of forcing greater competition, it creates a situation where imports are cheaper. And when imports are cheaper, as we know, 80% of imports or productive inputs are imports. This automatically reduces production costs, and it eases cost inflation. And we've talked about cost inflation and how trade liberalisation can ease cost inflation. But what does that do to economic growth? It means we are more competitive. If our goods and services are trading at a lower cost, and therefore international buyers or consumers would therefore tend to purchase our goods and services if they are indeed a perfect substitute with the rest of the world. And so if we become more competitive, that means more exports, and therefore as growth is determined by demand, greater economic growth. So as we can see, this idea of sustainability through easing cost inflation is achieved. I'm just going to give that a tick. And also strong economic growth is achieved through exporting more and a more permanent base of exports if we start producing exports that we are comparatively cost advantaged at. So that's how trade liberalisation can improve or help achieve the goal of strong and sustainable economic growth through two channels. Firstly, imports are cheaper, and secondly, through greater competition, which forces producers to cut costs and therefore move resources or allocate resources to areas which we are more comparatively advantaged and therefore more profitable.